If you rely only on your paycheck, you're participating in a different economy than someone who owns assets, and over the past few decades, one of those economies has grown much faster than the other. That shift explains why many people feel like they're working harder, but building less wealth. This isn't about laziness, and it isn't about bad decisions. It's about structure. In modern America, ownership grows faster than labor, and once you see how it works, you can't unsee it. There are two primary ways to earn money in the US economy. The first is labor income. You trade time and skill for wages or salary. The second is asset income. You own something that either appreciates in value or produces cash flow. Assets include stocks, real estate businesses, intellectual property. If you work, you earn. If you stop working, the income typically stops. But assets can grow, even while you sleep, and over time, that difference compounds. For much of the 20th century, wages and asset prices moved more closely together, but starting in the early 1980s something changed. Stock markets began expanding dramatically. Home prices started rising faster than incomes. Financial markets became more central to the economy. This is often called financialization. Capital became easier to access, credit expanded, asset values inflated, and over time, asset growth outpaced wage growth. The result? If you owned, you benefited. If you only worked, you lagged behind. There are several reasons assets grow faster than wages. First, compounding. When an asset grows, future growth builds on a larger base. Second, leverage. Real estate, for example, is often purchased with borrowed money. If prices rise, the return on your actual cash investment can multiply. Third, monetary policy. When the Federal Reserve lowers interest rates or injects liquidity, it tends to support asset prices. And fourth, inflation. When prices rise across the economy, tangible assets like bidragsor, dan, ibrensor, like woodish, anenno, andragastor, in equity in companies dandatsor, adun often rise with them. Wages, however, don't always keep pace, which creates a widening gap. This creates a two-speed economy. One track includes asset owners. They benefit from rising markets. They accumulate equity. They build collateral. The other track includes wage earners without meaningful ownership. They face rising housing costs, rising healthcare costs, rising tuition. But their income growth is often slower. This doesn't mean the system is broken. It means the incentives favor ownership. And over decades, small differences compound into large outcomes. Earlier generations often bought homes at lower price-to-income ratios. College was less expensive, debt loads were smaller, asset entry points were lower. Today, entering the ownership class requires more capital, which makes it feel like the ladder has been pulled up. It hasn't disappeared, but it moved higher. This isn't about blaming business owners, it isn't about attacking investors, and it isn't about saying hard work doesn't matter. Hard work still matters, but in a system where assets compound and labor does not, ownership carries disproportionate advantages. Understanding that is not pessimism. The modern American economy rewards productivity, but it increasingly rewards ownership more. That doesn't mean success is impossible through labor alone, but it does mean that participating in asset growth, in some form, has become more important than ever. The system didn't collapse. It evolved. And once you understand the difference between working in the economy and owning part of it,